Operating activities. In our last segment, we were discussing about different types of activities. So first of all, we'll take up operating activities. In a business, all activities relating to revenue producing are called operating activities. For example, you are running a bookshop somewhere. Naturally, to make the profit, you will have to buy the goods. I mean to say, you will have to buy the books. So purchases are operating activities. Because if you don't buy the goods, how will you sell it? If you don't sell the goods, how will you make the profits? So all purchases are operating activities. In the same way, when you bought the goods, you would like to sell it at higher price to the customers, which is called sales. So all sales are called operating activities. Moreover, to run the business, to run the shop, you have to spend on so many activities, which are called expenses. For maybe you are paying rent for the shop, maybe you are paying for the advertisement, or maybe you have some staff and you are paying money to them as wages or salaries. So all expenses and losses, they fall in the operating activities. In the same way, all incomes and gains, they fall in the operating activities. So I can say purchases, sales, expenses and losses, incomes and gains. All these four activities are called operating activities. One thing more, these operating activities, you will find them in the cash book. You know, on the receipt side, you will find sales, incomes, and on credit side, you find purchases, or on credit side by expenses and losses. So these all four activities are called operating activities. One thing more, all these operating activities, they go to profit and loss account, or you can say they belong to income statement. I would like to remind you the income statement or profit and loss account. You know, it is prepared in T shape. On debit side, you find purchases, and credit side, you find sales. On debit side, you find expenses, and on credit side, you find incomes. So, all activities which belong to income statement are operating activities. One thing more, I would like to make it clear to you. Sometimes some activities for some business are operating activities, but for another business, they are not operating activities. For example, you are running furniture shop. When you buy the furniture, actually when you buy the furniture, you buy it for the purpose of sale at profit. So that is purchases for you. That's a operating activity for you, because you are buying the furniture with the intention of making profit, not to use them. But if someone is running some computer business and he buys the furniture for the purpose of his convenience of work, that furniture will be non-operating activity, because that is not purchases for him. In the same way, you are running furniture shop and you buy the computer. Actually, when you are buying the computer, you need some convenience, maybe for the accounting purpose or for printing purpose, etc. That computer is asset for you. This buying computer won't be taken to the income statement. So it is a non-operating activity for you. But the person who is running the computer business, he buys the computer with the intention of selling to the customer at higher price and making profit. So when he buys the computer, that's a operating activity for him. But that's not a operating activity for you, because you are running furniture shop. So sometimes some items are goods for one person, but they are not goods for another person. So I can give you the definition of goods. Any item purchased for the purpose of sale at profit on routine basis is called goods. So for a bookshop, books are the goods for him, but for a furniture shop, books are not goods for him. Maybe he has bought some books for to see some designs, latest designs or some latest development, and he's keeping all the books in his furniture shop, but that stock of books will not be goods for him. You might be thinking, when we have prepared the cash book, then what's the need to group all the receipts and payments into three categories? I mean to say operating activities, investing activities, and financial activities. Actually, when you group all the transactions from the cash book, it gives you more clear position about the firm or company, and it helps the management to take more effective decisions for cash management.